Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app. So here's the latest this morning. Friday's payrolls report postponed as the government shutdown drags on. Steve Englander of Standard Chartered writing the US data quality has become, quote, more fool's gold than the gold standard. We expect the uncertain quality of the data to become the bigger issue than statistical agencies and the Fed have so far acknowledged. Steve joins us now for more. Steve, good morning.
Hey, good morning.
Tell us what you really think. What's going on here?
Look, it's become so common to say that the US data are the gold standard, and they may be compared to everything else. But there's so many holes in the data that haven't been addressed. And I'd say that, BLS, is not political in the sense that Trump accused them of being, but they've been kind of intellectually lazy over the last decade.
What's making them intellectually lazy? You're suggesting it's not just response rates. What is it?
Well, you look at the birth-death adjustment, which is basically more than half the employment growth we've been getting. And it doesn't reflect anything that's happening in real time. It's basically an autoregressive model that says what's going to happen January of this year is what happened January of last year. Now they're going to try and fix it. As a consequence, there will be not just the usual benchmark revisions, but big revisions from April through January. Or April through December, as well as a big down, weak number, we think, in January.
So, Steve, put the data through an Englander filter. What do you look at? What would you point to that says, you know what, I can rely on that. That makes sense. That's where the economy is.
I've used the image of being in Plato's cave. You sort of see a lot of images on the wall, and you try and sort of put them together to make a coherent story. But even the unemployment rate, which everybody lives and dies by, if the labor force is constant, all it takes is 70 or 80 people reporting that they're unemployed more than last month to push it up by 0.1%. Given how much stress we put on that, that's not a big number.
Okay, so I'll take your Plato's cave analogy, and it seems like we've been living there for about 6 years now with the data being called into question and, frankly, a lot of fluctuation since the pandemic. I just raise a question of what's your sense then, taking a look at all the images on the wall? Do you see a labor market that's stronger than people think or weaker?
I see a labor market that's pretty mediocre. It's not a disaster. There's no sign that it's falling apart quickly. On the other hand, it really is the case that if you don't have a job, it's, good luck and God bless. I mean, it's just not, the odds that you're going to find a job are relatively low. On top of that, the AI thing, the productivity thing, we think could matter in the short term. Although we're very optimistic in the longer term that jobs will be created. I mean, cavemen, the unemployment rate is no higher now than it was in the day of the cavemen.
Okay. We're really going back to caves and hieroglyphics. I'm just curious going forward about what you're watching to understand whether we're heating up and whether there is a degree of undermining the significance of this data on a permanent level as a result of the government shutdowns that makes some of this data optional depending on the week.
I mean, it can't be optional because the BLS is the only organization that has a real sample, that they sit down, they try and sample the entire country. Everybody else has samples of opportunity, who's posting on LinkedIn, whose payroll checks are you processing, and so on and so forth. They could combine all of this. I mean, there's so much more information out there than what the BLS is using, and information that's available in real time. They can do a much better job than they've been doing.
Trump has appointed someone new on Friday. I reported about it. He confirmed it on Truth. This is someone that people call a data nerd. I got messages from Biden-era people and Trump people saying this is a great pick for the BLS. Do you think a new commissioner could come in and maybe take some of this on board?
I think so, but I mean, the question is whether he breaks out of the BLS mindset. That, all you do is use inside BLS and you tweak this and you tweak that and everything is fine. Look, in NFP, I mean, we don't use ride shares, we don't use gig workers. They're just as much they're not entrepreneurs, they're just as much employees as we are.
When it comes to this report, we're not going to get it. But you have a very downbeat suggestion for how many jobs are created, actually negative.
Yeah, I mean, I think we're the lowest in the street, so at least as of yesterday. But look, the problem is that we've estimated that the bias in the birth-death adjustment, we estimated 70,000, Powell estimated 60,000. If they come up with a model that really takes current conditions into account and is consistent with other data sources we have that are better but lagged, all the numbers we've had for the last 18 months, just the birth death stuff will go down by 60 or 70,000.
Steve, you're a foreign exchange guy at heart. What are you advocating for at the moment, given everything you've just said over the last 5 minutes?
Well, like I said, the labor market is soft. And softer. In fact, what it tells you is that productivity growth, when we get the numbers that are based on the revised data, are likely to be even stronger than what's been reported. We believe the productivity numbers. We're sort of in the Warsh camp where it's sort of, we think that there's something happening in productivity. Productivity normally does not pick up 4 years into the recovery, 5 years into the recovery. And that's usually a signal that's something structural. That's what we saw in the late 90s. It's what we saw in the mid 60s. So we think that's by far the most important thing that's happening in the economy right now. And, arguing about 25 basis points here or there is kind of a waste of time.
What do you think we should be arguing about?
We should be trying to estimate productivity growth better and understand the dynamics that's going to happen. For example, we're dollar bulls because we think the U.S. has the labor market flexibility. You don't need a Bloomberg journalist, you let them go, but you find something.
Steve,
I didn't mean that. You don't need a foreign exchange economist. You let them go, but you find somebody but you're making money somewhere else, and you look at the profits numbers that we're getting. Historically, U.S. firms hire when they're making money. They might not hire the same people they hired 2 years ago, but they'll say, okay, where are we making money? Let's pick up some people and see if it works. Elsewhere in the world, in France, you buy a truck, you don't like the truck. For business, you sell it in 6 months. You hire a worker, 7 months later, you decide you don't like the worker. He's more fixed capital than the truck.
This has been a secret sauce of the American economy for a long time. Deep capital markets, bankruptcy, and flexible labor markets. Are we losing any dynamism?
I mean, there's a risk that we are. Look, there's lots of stuff that Trump is trying to do, or his people are trying to do. I think that's positive for the economy in terms of deregulation. But the sort of willingness to sort of say, yeah, I see a problem, I'm going to fix it. Like some of the things they've talked about the housing market. To fix the housing market, you have to increase housing supply, not housing demand. You'll just get higher housing prices with the same number of prices. I think they have to be careful about their willingness to interfere.
That's my concern too, that we're not embracing the dynamism that traditionally has laid the foundation for the American success story. That if anything, we're questioning it in the last 12. In fact, never mind the last 12 months, the last 5 years. And maybe you can go further back than that. Stay with us. More Bloomberg surveillance coming up after this. Terry Haines of Pangaea Policy writing, it's a strong signal that Trump is walking and chewing gum at the same time, not letting geopolitics distract from US economic attention. Terry joins us now for more. Terry, that raises the question then, who's next?
That's a very good question, John. And, I'd look for, among other things, a strengthening of the US-EU deal, which has been kind of on for, Davos-related reasons. And, beyond that, I would look for probably we should go out and look at Asia a little bit more, where the trade deals can be strengthened even further.
Terry, Tyler mentioned it, but Prime Minister Modi was one of the first officials to come to the White House. It was almost a year ago, February 13th of last year. Yet basically a year later, we are getting a deal. Was damage done in pushing India towards, say, China or Russia because this deal took so long?
There's been a lot of, Modi's got his own politics, of course, but there's been a lot of back and forth and a lot of kind of raw elbows between the United States and India on all kinds of things, ranging from the geopolitical scrapes between India and Pakistan, and frankly, Trump's desire to take credit for the lessening of hostilities there, to the Russian oil, all kinds of other things, many of which Tyler mentioned, and that has made things more difficult than they appeared to be last year when Modi was talking about MAGA plus mega equals MEGA, or MEGA, whatever it was, and but they have had a desire to do a deal for quite a while. It's been obvious that things have been thawing, and I think there's still some prickliness there, but there's a desire to do a deal. The other thing I'd say is that there's a lot of hand wringing in markets always for the lack of detail of these things, and that's entirely fair. But you look at the other way that this has been done in prior years, where deals have been negotiated. They're never finalized. Finally, they're finalized, like the EU with Mercosur, which took 25 years and they're still not done. So markets prefer progress. So that's a positive for markets.
Well, when you talk about the prickliness of this deal, the president made it clear they're not going to buy any more Russian oil. We didn't hear that from Modi.
Well, exactly. That's I made clear when I wrote that the details of this, many details of this, were not final. And I imagine, and I am. This is instinct on my part, I imagine that the timing of winding down Russian oil purchases is the major reason why Modi isn't talking about that. And I also imagine that there are a variety of other details that both the United States and the India want, also relating to timing, purchases of what, when, and how, all those sorts of things. And that's about, I think that's the reason why we have kind of a sliding deal here.
Is there a tell in this, Terry, that perhaps the U.S. is taking a harder approach with Russia as a result of some of the ongoing negotiations with European allies about the war with Ukraine and Russia? And I ask this because that's a key component of this deal. India agreeing not to buy Russian crude.
Yeah, I think so. I think it's a major signal from this deal. Trump likes to do what he can to butter up major adversaries, and that gets off-putting for domestic audiences sometimes. But I think there's no doubt that what the United States is doing right now is trying to push Russia and squeeze the lifeblood of its war machine. Then European allies are helping. A lot of the Ghost Fleet activity coming back into European waters has been harassed and more. And so what you're seeing is a kind of a ramped-up effort based on what not only the United States, but more importantly, the Europeans are willing to do. They were not willing to, for example, take frozen Russian assets and convert those for Ukrainian use, but they are willing to do that. So the policy is shifting to that, and that will have the usual effect on Russia's economy, but it also makes China's support and pumping up of the Russian client state even more obvious than it is today.
Stay with us. More Bloomberg surveillance coming up after this. We've got some data from Yelena Shulyatyeva of the Conference Board. She writes this about consumer confidence. Confidence collapsed in January, hitting its lowest level since May 2014. Concerns worsened across all age groups, income levels, and political affiliations. This wasn't a one-month fluke. Yelena joins us now for more. Yelena, good morning.
Good morning.
This one is really hard to internalize. Just the idea that consumer confidence is worse now than it was in the pandemic. Can you make sense of some of this for us?
And what makes it even worse is that it's a trend. It's just not 1 month's thing, right? We have seen it declining for quite some time now, and that what makes it very legitimate, actually. So confidence right now is at the worst level since 10 years ago, but it was worse before. If you go back to the Great Recession, coming out of the Great Recession, that's how consumers feel. felt at that time. So think about it this way. Now consumers are feeling actually that as bad as they were coming out of the Great Recession. So that tells you something.
So what does it tell you? Because a lot of people come on the show and they say ignore it, because frankly it has not been instructive to how the economy has done, and frankly how you've seen companies and even workers demonstrate their spending capacities.
Well, every bird likes its own nest, and kind of like I do believe in the data, just again because it's a trend. It's not just a 1 month thing. So I think there's something to it. Consumers are worried about jobs, consumers are worried about affordability, and consumers are worried about their income levels. So this is very important because that actually coincides with what the actual data are telling us. If everybody was talking about how great GDP numbers were in Q3, but I looked at income data in the same exact BA report, and that data is telling me that disposable personal income in real terms, which is income essentially adjusted for inflation and taxes, that has been flat since Q3 of this year. So that is weakening, and that is the fuel for consumers to spend going forward.
Is this an economic issue or is this a political issue?
In terms of consumer confidence?
Yeah, and I ask this because ultimately, if you look at the averages, they're pretty good. Mm-hmm. But if you look at the politics, it's the affordability crisis that you're talking about, and certainly a lot of people are feeling every single day. So does this get represented in the overall economic data, or in terms of what policies are going to come out of Washington, D.C. to respond to some of these issues?
I think it's both. It's really about how unaffordable things are, and it's all about the economy, stupid, right? At the end of the day, it's about prices, it's about jobs. Consumers are not feeling confident about finding a job. So it is about the economy. I do think that political things and other disruptions are playing a role as well. Consumers do hear the news, and oftentimes, confidence and sentiment indicators reflect what is happening in the news. And there's even some special indexes like news heard in the Michigan survey, right? So that is something to take into account.
Yelena, a lot of guests will come on and they're talking about the excitement of the tax rebate. Where do you see that money going?
I think, I'm very cautious about that because I think that people spend a lot of money during the holiday season, and they may have to return this money.
It's spent already.
It's already spent. You do see a significant pickup in credit card balances over the last several months, and that is the data coming from the New York Fed. And I think that given, the constraints in terms of income growth, in terms of the labor market, people will be cautious and will try to pay back some debt.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.